Now to clean energy, a stark report from the IEA last year outlined the need for concerted efforts to deliver sustainable energy to the developing world. It said annual clean energy investment in these economies needs to increase by more than 7 times if net zero by 2050 is to become a reality. One group working towards this goal is the Climate Investment Funds, one of the world's biggest multilateral funds for climate action in developing nations. Last week, it received a fresh $950 million loan from the U.S. Treasury. Joining us now for our weekly Charging Forward segment brought to you by BMW is Daniel Morris, CIF Senior Climate Change Specialist. Good to talk to you today. Let's start with that big injection. I mean, it is a loan, not necessarily a capital injection, but how do you plan to deploy that capital?
Yeah, thanks, Akiko. The loan that we received from the U.S. will really help support our new Accelerating Coal Transition Program. It's a program that's been developed over the past couple of years to help some of the key emerging economies that are very reliant on coal accelerate a move away from using that power source and toward more renewable power sources. So within the program, there are kind of 4 major countries that are participating: India, Indonesia, South Africa, and the Philippines. And this large loan will help execute projects that are under design now. Right now, those countries are putting together investment plans that will lay out how they intend to deploy investments and bring co-financiers in to support over the next few years, and that'll be a big part of that.
Daniel, we're just a few weeks out from COP27 over in Egypt. I'm thinking back to the big pledges that were made on climate financing a year ago. The argument would be that certainly a lot of these governments as well as companies haven't really put their backed up their actions with the pledges they've made. When you look globally where the need is right now, where do you see it?
You know, when it comes to tackling a problem like climate change, there are so many needs that it's hard to isolate them. So I think you need to deploy a broad approach. You know, I work in the clean energy and clean tech sector, and we have a lot of resources that we can bear on different things, investments in different types of technologies. That's established technologies like solar and wind, and emerging technologies like, say, energy storage, e-mobility, green hydrogen. That needs a lot. And we're starting to see more and more of that. Of course, we need a lot more if we want to reach the goals that the international community has set out. But we also need to see a lot more investment in adaptation and resilience. A lot of countries, especially lower income countries, those that haven't really contributed much to the climate crisis, are feeling the effects in really catastrophic ways. The most tangible example right now is Pakistan, where the flooding in August resulted in over 30 million being displaced. We need to build more climate resilient communities, and the international finance community really needs to start to focus on those with large scale and a lot of power brought to bear to try and protect people from what will continue to be a changing climate.
Daniel, really quickly, we've got the World Bank IMF meetings happening over in D.C. This comes at a time when, we had an op-ed coming out from former Treasury Secretary Larry Summers saying that the World Bank just is not doing enough in terms of financing some of these projects. When you think about the need globally, how much of this falls on the development banks? How much of it is on government? How much of it is on the private sector? How do you look at that breakdown?
Yeah, I mean, it's a great question. I think I can talk a little bit about our experience in the climate investment funds. We are a fund that uses 6 multilateral development banks as our implementing entities. So we work with the World Bank, we work with the International Finance Corporation, the regional development banks. And when you look at our overall portfolio, about 1/3 of our co-financing comes from the private sector. Another 1/3 comes from the MDBs themselves. And then we also have national governments in there, bilateral institutions. It really is all hands on deck. I think that public financing really needs to pave the way to support communities that are in danger and, kind of come in and bring their power to bear.
Daniel Morris, Climate Investment Fund's Senior Climate Change Specialist. Good to talk to you today.